The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon. What is today? It's August the 5th. What is today? It's the first day of the week, Monday. What is this? The second hour of the trading day. And where are we? We're down a little bit. We're down minus 37 in the Dow. Thank you, Steve, for 2 great hours. We have programming right through the day. Straight after my show, you've got Larry Pesavento. You've got, straight after Larry, you've got Daryl Martin. You've got Dave White. You've got Tom O'Brien. Well, today Steve Rose will be sitting in for Tom O'Brien. I'll be sitting in tomorrow evening at 5 o'clock for Tom O'Brien. And Tom's away, so while Tom's away, the mice will play, and let's just look at the market. And we're saying to ourselves, as someone said to me yesterday, very interesting. It's a guy, I met him, I'd never seen him before. We just happened to be at a place, kind of a vintage place in, where was it? Stonington in Connecticut. And just on the way back from Brooklyn. And went in, just wanted to have at least one day where we saw a bit of the ocean. And a very pretty town. I hardly ever been there. Many years ago there. And it's just as quaint. And I met a guy who was looking after his good friend's place as she went out. And he does pretty much the same thing. And we were talking, and he was a chef at some point, and he does a bunch of things. And he has a little store, and he has some goods things that he sells. And what do I do? Well, I told him what I did. And he said, and he shook his head and he said, this is some market. Now, this is the exact, if I could have a video of he's shaking his head, this is now a middle-aged guy, shaking his head and saying, well, what's going on? Whenever anybody says to me, what's going on? Now, I could be presupposing, I could be juxtaposing, I could be interpolating, I could be doing all sorts of things. But to tell you the truth, my gut feeling, and it's usually right about this, is that these are people that are not in the market, or if they're in the market, they're only partially in the market, and they don't even understand how they're doing so well, when in fact things are looking so bad. And in fact, for some people, things are actually looking bad because in middle age, you can't get new jobs. It's very difficult to get unless you're really highly qualified or you know someone or it's family, business. And I suspect that this guy was in some kind of transition phase. But here's the thing. He was doing unbelievably well in 99 going into 2000. Well, I don't have to tell you the rest of the story. You didn't have to tell me the rest of the story. And he's just been avoiding stocks ever since. And he just shakes his head. Now, what does he do with his mother-in-law's? What does he do to help his mother-in-law? That's the older generation. Well, the older generation used to be very easy. You put them in bonds. Or you have a huge weighting in bonds, fixed assets. And other things go to stocks, dividend stocks, Procter & Gamble, those safe things. Well, Procter & Gamble's had a fantastic run. The dividend stocks had a fantastic run, then got smacked, many of them. But they still pretty much higher. What do you do? Well, that's an issue. It's a really big issue. And I think that's something that, in a way, in my market that I hope to be dealing with. I've dealt with it. I'd like to be dealing with it a lot more. And it's going to be a really big issue going forward, as of this very minute. Why? Because with the huge influx into mutual funds, a record in June, and the money coming out of bonds, which very often starts off coming out very safely. In 1999, you didn't get people just going, you hadn't had people going straight from bonds to Microsoft or any of the big caps, wild four-letter names from the NASDAQ or that type of stock, or AOL. But they did come out, and they did go to cash, and they did go to something. At the very end, I'm absolutely sure you did get people going straight from bonds, from the safest to the most riskiest. That's just what happens at major tops. So I'm going to be dealing with that over the coming week or so, and especially in my newsletter. What do you do? Well, what we've done is we've chosen some great fallen down American companies. And so for the percentage gains that they've given are really nice. We're also having some speculation. We've still got our one very, very speculative stock with the turnaround stocks now up about 80%. And we've traded it actually quite a few times successfully. But that's part of a portfolio. I mean, what do you do if you're still holding mutual funds? Yeah, you get newsletters and all, that's great. But the money that you got is really in those safe mutual funds up until now. Well, those are the things that I hope to deal with. Now, let's just run the numbers. The Dow is down 37 at 15,620. No new high today, and the day's young. So we have to wait. No new high in the S&P. The S&P is down $1.31 at 1708. There is a new high in the composite index at 3692, up 258. You've got gold trading up about 3 to 4 points at 1314. You've got silver up a little bit. Oh, silver's now down 22 cents at 1968. You've got bonds down 330 seconds at 133 and 20 seconds. High-grade copper is moving up a tad, up 0.02 at 3.19. But you've got the dollar up 11 cents at 82.02. And I'll talk about the euro right now. Let's go to the euro, USD. Oops. Oh, I hope I didn't do that. Did I just do that? Where did it go? Oh, it went right there. Oh, no, I didn't mean to do that. And what was my first one? I think that was... Oh, I hate when I do that. Oh, it was the second one. It's even worse. Oh, that's the Dow. Okay, I believe that's the... Oh, boy. I'm going to put it in as the Dow. INDU. No, it wasn't the Dow before. It was something else. Oh, it doesn't matter. So now I'm going to get rid of the black background charts because that's what I used to go through all the different indices. And now, look at this. We've got, and this is the most important thing, I've just spent months and months and months talking about it. The VIX index is at 1207. It is down at near the lows. It's actually a little bit up today, 0.09, up 09. 1107. 1109 or 1107 was the last major low back in, I think it was in July. So 1105, that's right there. 1105 was the low back in. Oh, no, that was the last one was March. In March, the week of the 15th, 1105 for the volatility index, 21.91. A double, almost a double. Back in for that high, back in June the 22nd, week of the 20th, what is that? Week of June the 28th, 20.91. What does it do? It comes all the way down to last week's low of 11.98. Now, as long as that buying pressure, that's all it is buying pressure. And as long as that buying pressure remains, there is upside potential for the market. But I tell you what I'm rather intrigued about. I'm intrigued about there are times where we make highs where there is no news. There's really no bad news at all. There's good news, no bad news. But those are for major tops, like the top in January of, I think it was the 14th or whatever that was in January of 2000. That was quiet. That was a silent top. Everybody was looking up. Suddenly the rug got pulled from below. And then it took 3 months before the S&P and the NASDAQ 100 made their all-time highs. And for the NASDAQ 100, major all-time highs. It is way below that high. So let's just have a look at it here. NDX 100. Let's go to the Qs, 1, 2, 3. Look at that. major top at 120.50. When did the Qs come out as an ETF? They came out, and it's always fascinating to me, right there. March of 1999, 1 year later, it was all over. Then you got that Eiffel Tower top at 120.50, and then kaplop. Did the comp index, I wonder if I've got this notated. Oh, shit. What? How can the comp index not be there when I just did it the other day? Now I'm getting very upset about this. I'm going to be calling them again today. NDX at least is there. Yeah, I didn't want the index. Yeah, okay, that's fine. No, NDX is good. See, the NDX, now I used to have this notated, but for the moment I haven't got it notated. Just we'll deal with that. But that high at 48.16 went to a low of 48.16, went to a low of 795. Is that a crash or is that a crash? So I said at the time that I didn't believe in my lifetime we would ever get back to the highs. Well, this is very interesting because the NASDAQ right now is 31.42. Let me just type that in so you can see 48.16. Hey, it's not so far away. 48.16. I'm going to put it to the penny. 48.16.35. Wow. 48.16.35. There it is. And, okay, well, we'll see. We'll see if it's possible. Hopefully, it's in my lifetime, I'd like to say. I'd like to be here to apologize. I'd like to say, I made a mistake. We have gotten back to all-time highs. An almost 90% decline has recovered. 100%. That'll be amazing. All right. Anyway, let's go on. So when I'm looking at the markets, this is what I'm looking at. If I try to put it into a package, the first package I would do is to say, in my Dow Quartet, this is a made-up index of GE, holding nicely at 20.56, right in the 9-period exponential moving average. But the technicals are really not confirming this move here. I'm a little concerned. I like it. We actually own it. I'd like to see it in this move here, go to leg D in the weekly chart, and then it can take a breather. I'd like to get over 24.95. 24.95? Come on. That's nothing. The other day it went to 24.87. It should be just an eye blink away. But that's when you got to watch things really closely. It might take more time before it can get to leg D. In the weekly, it's in leg D already in the monthly. But wait a minute. The all-time high was 42.15 for GE. The low was 573. And it went from 573 to the most recent high of 24.95. So it's way underneath the all-time high. Look at IBM. Wow, is that the music already? Yep, IBM. IBM is making a high-level consolidation. It's having a real tough time. The technicals are failing. The price is holding, but not great. The weekly chart says, ooh, IBM, you better hold 188 to 187 support. It's at 195 right now. Let's go to Triple M, and then we'll take calls at 877-927-6648. Triple M has made a peak D, and UTX, all-time high. UTX is all-time high.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. I had an email asking me a question. What's my stance in terms of positioning? So I have subscribers. It's not really fair for me to give away some information when we are so close to the areas that we've entered. But I would say that in terms of the Dow, we've been short for over a week. Let me just check it. And we're within, I think, about 16 cents of the one position. And the latest position is down a few cents. But I'm making it tight. I'm just making it tight. And let me explain what I'm looking at. When I'm looking at the Dow, this is what I show my subscribers every day. You've got these quintiles. So what I've got is, here is a 120-minute chart, which went to a peak D. In the Chapman wave, what we always look for is from the lowest low bar, in this case 15,404, that was back around about July the 26th or so. We look for 4 higher peaks, and we went to a peak A, B, C, D, and then it snuck on Friday to a peak, to a leg E, which might be a peak E if there's no new high today. As I say, the day is just 2 hours old, and not even 2 hours yet. And I don't want to talk about it as if it closed. This is where it is right now. The 120-minute chart of the VIX went right through the 1207 left side low that was made on the 23rd, I think it was 23rd of July, went all the way to a peak ABCD, and then went to an E at, I didn't type that in, 1357. Let me just put that in. 13, that's 86. 13. That is 1414. At 1414. 14.14. Did it go? Yep, it did. And plummeted from 1414 right down to 11.98 on Friday. At that stage, it says it's getting real close to a bounce. But all I can say is it's a bounce because why? In the H formation, this is the technique that I teach in my Master Trader series and on my webinars. When the left side low is taken out, there are 3, let's even call it 4 different methodologies to use. One methodology is if it doesn't break the left side low bar at all, but in fact it remains quite a bit higher and rebounds, it says the price can rebound to a certain level. If it touches it but doesn't pierce it, in other words, this one went back to 1207, didn't pierce it, that implies something else. If it pierces it but doesn't close below, because it closes above the 1207 level, in this case on the VIX, that implies something else. And then the toughest of all is when not only does it close lower, but it continues lower for a couple of sessions. That's usually still very negative and implies that a great deal of energy has to be triggered for that, whatever it is, that price movement to really supplant all the selling and to be able to break and start a brand new buy signal. Because that's all that it could take is to be able to break to the upside and back into the arch and hold. It needs a brand new buy signal. And we haven't got that yet in the VIX. But in this particular instance, I'm looking here on the right, the upper right quintile. And that is the short-term trading index, Richard Arms' short-term trading index, which I use with a particular methodology that I've built and developed. that I've developed. And that says it's just kind of neutral. It's not giving me any indications yet. Now look at this long-term trend line. There's a very simple one here. Just using the bar, you've got resistance right at the 15,658 previous high of Friday into that area. It can go a little higher. There's another chart that I show right now, right here. Not here, but here. There it is. That... where did it go to? There it is. That shows you, there's that trend line that we're looking at. There's the one that's very important to me. And that says there's a space. That inside track there says, you know what, between now and Tuesday or Wednesday, the Dow could in fact get into the 15,690 to 15,720 area. Possible. If it breaks out of that, that's very positive. But there are a couple of things here that are hinting that there's limited upside, which I discuss in great detail with my subscribers. Now, there's something else. So I am still in that short position in the Dow for subscribers, but it is not a very hysterically moving ETF for the short side, number one. Number two is unless there are 28, 29, 30 out of the 30 Dow stocks that are closing at their highs or lows, it actually doesn't do the full 100%. It's less. I call it a pathetic. But it's great because if you want to step in cautiously to protect your portfolio, this is an ideal situation because in the end it will come down. It will go up in the same percentage as what the Dow comes down. So, we'll be back at 877-927-6648. In fact, you know what? I'd love to take your calls. Dow's down 39, S&P's down 0.96.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. All right, so there's a couple of things that I'm going to do here. But before I do that, I want to just say, in the Globe, Boston Globe today, I read that at Newport this weekend, Newport, I think they called it a folk and something festival, Jazz and Folk Festival, I see that Jim Hall was playing. Jim Hall, one of the great guitarists. You know, it's embarrassing to say, gee, I didn't even know he was still alive. But yeah, Jim Hall playing. I mean, just, you go back to anyone, even go back to Nat King Cole, and you've got Jim Hall playing there. One of the great, Jimmy Jeffrey trio. Wow, wasn't that a wonderful surprise? And what a great write-up he got. 83 years old. Great musician. Anyway, all right, back to our story. All right, so UTX made a high on Friday, all-time high on Friday at 107.86, slightly lower high today, but it also made, let me just double check, 107, 107, 107. 3 in a row. We've got 3 107, not 107 round numbers, but the highs are 107. So this has to be watched very closely. Weekly is still very good. Monthly is excellent. The daily is still 92%. I think it's a tell. How it reacts and acts is going to be important. So you've got G doing okay, not great, okay. IBM, lousy. Triple M, fabulous. All-time highs this last week, and UTX, same thing, my Dow Quartet. Now, this is going to be interesting. If you look at Google is trying to retrace. That's that H pattern turning into an M pattern. I'm watching Google really closely. Peak D, maybe, if it doesn't make a new high above the 900 28 round number high of July. Very important, all of this. And I'm almost sure this is going to be a peak F. I can only say it will be a peak F if Google trades. It doesn't have to close, but even if it trades to the 975 level, which is 20 points, 25 points down from here, which is not a big deal for an $899 stock. So I'm watching Google really closely. Hey, how about Amazon? AMZN. So you see, when you go through all these different, what I call the quartets, each one, Amazon spiked to that needed peak D, and there it is, peak D in the daily, and I have to put a down arrow in the daily. What is it? It is a peak E/B in the weekly. No change there. 92% stochastic. MACD is good, and the weekly chart, the technicals are okay, but the price is fabulous, holding above the 9-period moving average, trading at $299, down 4 right now. You've got Amazon with a potential for a peak F top, unless it's recycled, and this is D, and this is D, could go to an E. So at this particular point, short-term, Google and Amazon are saying be real careful. Weekly charts are still, the jury's out. Hey, wait a minute. We've got Priceline. I don't know if I've updated it. Priceline, leg D. It needed the... Oh, man, I love this technique. Look at this. Leg C in the weekly chart, so there's nothing there. Possible new buy mode goes A, B, C, D, but I don't have to think about that right now in the monthly. The weekly, great. I've got a D. That's all I needed, because from now on I need to say, okay, you got to be a little bit careful in the weekly, but technically nothing wrong. 91% stochastic. Look at the daily. It does this pattern that I love. That's the channel or falling X pattern, and it goes to where? The leg D on a spike today. And let me just look at the numbers. Opens at 914.90, goes to 930.74, low is 910.26. Nice strong day in. Priceline, we're missing one. I look at Baidu, although it's not usually part of my group. Baidu leg E, possible peak E in the daily, possible peak E in the weekly. A retracement mode in the monthly was A, gray A, because the last high of peak F way back in July of 2007 is still the most important level. So you've got some very important, I'm missing one. Oh, Apple, of course. Apple, it's still a very important stock, even though it's had a huge pullback. Apple, this is what I discussed last week. There was a chance that Apple could test the 200-period moving average. I said the moment it gets to about 461, 462, the magnet of that line, the 200-period moving average, right at 468.50 would be tested, and today's high is 469.40. So Apple's acting well. It's helping the Qs. Now let's do that. Now let's go to the Qs. Look, 1, 2, 3. New high with the doji today, candle. This is leg C/F. I have to keep that F in mind, but really I think it's more C/F. So I'm calling it leg C for now, and that corresponds together with the futures, because the NDX 100 futures is in leg C as well. I'm calling it leg C. There's no question about it. So it means that you can go one day with a pullback. That'll have to be tomorrow, which means that the general market will have to pull back tomorrow as well if you're going to get a peak in the Qs, and then Wednesday or Thursday you can get that leg up, and then we got to watch closely to see what happens. Look at the NYA. The NYA.X is at this particular point retesting that cup formation. I'm watching this real closely. It doesn't have to make leg D right now in the monthly chart. This is all good enough for me, this action. So we're going to be watching the NYA very closely, because the daily technicals are not that great. The weekly is very good. Monthly is very good. Let's go to Dan in Basking Ridge, New Jersey. Hi, Dan. How are you?
Doing well, sir. How are you?
Good. I'm well, thank you.
Basil, I wanted to touch base on, you went over the VIX quite a bit, but
yes.
I just wanted to see, obviously at the all-time lows, I'm trying to figure out, what the risk-reward is of either going and just holding on to one of these VIX counter products or products, and...
that's a great question. I was thinking about that over the weekend. In fact, going into last week, Thursday, Friday, then I spent a lot of time on it Friday talking about the VIX. And then over the weekend, I kept thinking about this. And, there are people that are able to do it. I'll never forget that I had a client, I've spoken about this before, a client who shorted, he was a great, his predominant thing that he did was shorting. And he worked together with Chanos. Chanos was one of his advisors. And he would go short, and I'd be looking at the stock, and I'd say, God, how can you, David, how can you, I don't know. And he said, no, yeah, it's fine, I got patience. Well, one great example of it, I'm trying to think of what the stock was at Omega. It was a software company. You remember the first memory? What was it that came out? The company...
EMC?
No, it was... I'll think of it in a moment. I can actually see the symbol, right? The emblem that went with it. Anyway, this company came out as an IPO, and about 8 months, 6 months, I don't remember what it was, maybe 8 months later, 6 months later, he came and he said, what do you think about it? I never used to ask him whether he wanted to short it or go long or anything. I would only do the analysis, and then he'd have to make up his mind. I said, I've got it as a peak D, and I'm about to, and it's on a sell signal. But I can tell you this, that if it goes 1 penny over, I think it was like 22 or 18.50, 1 penny, and it could recycle. He didn't understand this whole concept of recycle. He said, wait, is it a short? Is it a wait? I said, I'm on a sell signal. But if you were to sell it, you've got to put a buy stop 1 penny above the previous high. Well, needless to say, the stock went 22.50, 25.50, 29, 33, 45, 55, 73. It just kept going and going. Well, do you know that he did other things? He used to use the S&P futures during the day that he would trade. So I think that's where he made up to be able to build up his portfolio, to have his capital so that he had the money for these shorts that he would have. Do you know that this company eventually went insolvent, or BK, they might have gone around, come back again? So he was absolutely correct, and he had the patience and the money to keep shorting. Oh, I'm sure he covered along the way, but his main bias was to short. And so, now let me do this. Let's get back to the question. I have to mention that. Why? Because everything about the VIX, right now, I won't do the VXX, I'll just talk about the VIX per se. The VIX index at 12.09 says, if you have the patience, you will see this at 35 or maybe 48 at the previous highs, back in the 48s, at some point. Well, it means that you're going to tie up your capital, number one. Number two is that when these things move, when they come off the bottom, very often they come off a little bit begrudgingly, and then out of the blue, boom, they just rocket higher. Well, if you're in it, that's fantastic. You don't care that you were just paying interest for being short, or you had an ETF that you were just holding and you had tied up X amount of money for X amount of time. Do you understand where I'm going with this?
Absolutely.
I'm really saying to you, everything about what I'm looking at says there's going to be a period within the, I don't want to give it an exact time. I'm not talking about just a little pullback of 3 to 4%. Everything what I'm looking at says there's going to be a pretty deep pullback. I don't know yet whether we've initiated that turnaround, whether the tide has turned, but we're just waiting for all the signals to flash, and that isolated wave, that the rogue wave is still to come about, but in fact, the majority of stocks are turning down. But I'm at the point in my UTX and Triple M charts that say the dailies at least are getting, this is about where your DEF is, where you start to think they're not going to recycle in this particular move at all-time highs just yet. So I would suggest a way of doing it, and a really good way to do it, just to get a feel. Now I can go to the VXX, or you could even, another way to do it. Here's the VXX. Let me get out of the monthly chart, and I'll talk about the VXX. What other vehicles would you be looking at? The VXX.
VIIX.
The VIIX. Okay,
short term.
That's not one? Is that 1-to-1 or 2-to-1?
That's a 1-to-1. I've done the UVXY, but I've been stopped out of that. It's just.
You see, my thinking right now is to be able to nibble at something,
right,
and set that money aside and say, I don't really care. I'm not even going to look at it right now, because it's one of those vehicles that if you have enough patience, it absolutely will go much higher, but it could also go much lower. And much lower means that from 7.63 even down to 6 is a very big percentage. But that's the only way you can play it if you want to be in it for the turn. Now I've said that, so I'm just going to put down VIIX. Now, the other thing that I've been working with lately, I'd worked on it before and then I sort of forgot about it, but I've been doing quite a bit of work on it lately. Let me just get rid of this here and I'll show you what I'm looking at. Another way is to actually short this. Now, I prefer at this particular point, I'm doing it for a much longer period, is rather than short sometimes, if there's an ETF that can do, if it's not a stock, but there's an ETF that in fact can do the same job for you and can do the job. I did need that. Let me go back there again. I think that's the one. Let me just see if this is the one. So that can do the job for you as a long position. Then you don't have to worry about having to make up money if it goes short at any particular point. You know what you've lost, but you don't owe more than you have. Then the best way is to look at an ETF. I'm just thinking the simplest is a 1-to-1 right now. But I am telling you that there's residual strength at some point, and my suspicion is it's after this bout that we're looking at now, with the information that we've just got about June and July, but especially July being the greatest amount of money coming into mutual funds ever. For me, that's a sign that says, okay, the public's coming back. I'm looking at it and I'm saying, I want to be there when the public comes back, but after they've been disappointed yet again. Because that's kind of the way the market works. I just don't think the market's going to reward everyone right now for jumping in at the most recent highs. It just doesn't. Markets don't do that. They always have a little bit of fun with people. Those trading gods are sitting there cooking up fun. So now this is what I wanted to show you. If you look at the VIX index, I'm using the black background. It's a little bit starker. I want you to get the pictures if you're looking at Tiger TV, so you can really look at it and say, oh, yeah. There are periods that you can stay down in the low teens for quite a while. Look at that whole period from 2004, from 2003, when it finally broke under 21, you stayed in the teens, even you went down to 939 for a long time. Yes, there were bounces. So I just wanted to mention it can happen. Look at this period there was back in 1992. No, 1991. You traded in that position all the way through until 1996. Yes, there were a couple of spikes, and the one spike would have been fantastic, going to 23.87. But it was just 1 month that it did, and then it pulled back immediately. So it's the position that you have in relation to the other stocks that you have, in relation to your overall portfolio, and I'm going to say in relation to everything that you own. That's the way I would look at the VIX. And I would say, if I'm prepared to put away a little bit of money, and I would not make it big right now, and I'll tell you why. You might miss the very first big move up, and it's fabulous to be in because it gives you a good cushion, but then it also gives you the cushion for adding later on if the weekly starts to close above 20. You see where I'm going with this? That you got yourself a cushion, and then you got yourself another cushion because you're going to try to get in after a big spike on a pullback, but you've got the cushion of being way down, way lower. So, give me the break's coming up. I'm going to look at, there's another one that I wanted to show in a moment, and I'll talk about it, and I'll be right back with you, okay? We'll be back with Dan.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, everyone, we're back with Dan in Basking Ridge, New Jersey. So, Dan, this is my thinking here, and something that I was going to bring up as a very, very, very important point. And thanks to Mike in the Den, who just reminded me about it. In fact, I was about to say it, and then I forgot about it. And then the reason why I'd spoken to you about the one-to-one is that I find that those are the ones that they lose the least in the daily reconfiguration. You've got to put that into the pie. Now, what might happen is that with reconfiguration, in fact, the percentage loss until it really gets moving could be greater. So the timing is very important. I just wanted to show you a couple of things here, and we can spend a little more time on it tomorrow or the next day, because I think there's going to be one bounce that the Qs are going to give before, or maybe even the New York Stock Exchange, before we actually get some kind of a top. That's my thinking right now. But if you look at the XIV, that's just the index itself. That XIV is at, and that's the volatility index. This is the inverse of the VIX index itself. The VIX is right now making a low of 12.05. The last low on Friday was 11.98, and this XIV is going to new recovery highs. So it's in a straight line, and these straight lines invariably they don't revert to a downtrend immediately. They have a pullback, and then that pattern, that either right shoulder failure pattern, like an H pattern, but at the high level, that's what I'm anticipating here. I think that the XIV is within $1, let's say, I wouldn't even be surprised at 75 cents, of some kind of reversal, whether it's just a one-day reversal or it's actually the reversal that takes 2 weeks of consolidation for the market while this pulls back and the volatility index climbs. That's what I'm looking at. That's why I think the one-to-one is the only way to go, and I would make it a very small part of the portfolio. And I can just tell you this, that follow the VIX. When the VIX breaks to a new recovery high above 1414, that was the high on the 30th, this market will start to pull back. The next level on the VIX to watch would be 1456. The moment the VIX breaks into the 15s and 16s and holds, it's got to hold, the trend will be in place for some kind of a pullback, shorter-term pullback. That's what I'm looking at. I hope that helps you.
Tremendously. Thank you.
Thank you so much for calling. So, look at this, folks. This is what I'm looking at. So, we've just done that little exercise. Now, if we look at the UUP, this is the dollar power shares, DB US dollar bull. Don't forget, Larry Pesavento is coming up straight after this. Should be a wonderful show as always. Great shows right through the rest of the day. Now, let's look at this. The power shares, DB US dollar bull, is going to test that trend line there. But it's stuck for years in this trading range until it gets to the 23s. It's not going anywhere, but it better not break down underneath 2120 or 2130 because that's going to be very negative. But the SPY, that's the SPY, is moving into leg F/A. That's important. And look, TLT, the T-bond, Lehman 20-year T-bond fund, is going to new lows, but it's in trough G at this point, unless this is a recycle B. Boy, if that's the case, you've got to watch out. Why? Because in the triple yields chart, which I usually show my subscribers, I didn't show it today because I showed it last week, I think there's a chance for a peak C here. Just a short-term pullback on the weekly basis, maybe 2 weeks or so. You see other peak Cs have taken about 2 weeks, maybe 3 weeks, and then gone back to D, up to new D. So I'm suspecting there's a chance, just a chance, that the major indexes, the Dow and the S&P, are forming some kind of a top here. The Qs have not yet done it. New York Stock Exchange doesn't have to go to it's way under its all-time high. That's going to take time. That's why I'm bullish looking out. So that's that. And the other thing I want you to show you, look, wood. This is the iShares Global Timber and Forestry ETF, WOD, trading at 40.45. They could be making a peak A here with that H formation. And look, the failure in the home builders. So I am very cautious right now, yet we've got long positions that are acting well. It's a bifurcated market. Think that way. Stay with your longs, raise the stops. Don't be afraid to put on shorts, but put on your buy stops or stops if you're going short an ETF on the index. Hey, thanks for being here, folks. I'll be back tomorrow, and then I'll be doing Tom's Show at 5.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.